Yeah, good morning. It's great to be with you. So, we still think there are some pretty material uncertainties and risks here that are going to be unresolved, or we might not get a resolution to for another couple of months. And the key here is that the markets are hoping that the Fed is now executing a pivot, that the Fed is going to be less aggressive with future rate hikes, and it's looking at long-term inflation expectations. It's looking at a potential peak in inflation happening last month that would help support that. But we think the next round of inflation data, the inflation data we get on August 10th, is going to show yet another rise in the year-over-year rate of core inflation. And that is going to make it very hard for the Fed to message a scenario where they're going to be able to relax that rate hike. So I think if the market is rallying because the growth environment's getting much better, that's easier to justify. But we think the market's getting too excited too quickly about an idea that the Fed's about to back off.
Okay, well, that's interesting. What about the earnings picture here? Because I think a lot of people were anticipating that the earnings would be a drag on the market from these quarterly reports, but actually some have stood up a whole lot better than expectations. And yet I still think that in terms of the bias, it is to further downgrades at this point.
Yeah, that's certainly our view. So we were in that camp where we thought that earnings were one of those risks that would cap upside to the market. And so far those earnings haven't been great, but they've come in somewhat better than expected, somewhat better than we expected. Now, we still think that there is some elements of that is unresolved, that we might not get a full resolution to until next quarter. Because again, the headline GDP data was quite weak in the first and second quarter of this year, but some of that was a function of inventory numbers and other kind of odd one-offs. It might be the third quarter that better reflects the full transition from goods spending to services spending, that better reflects some of the real kind of slowdown momentum that we're seeing in PMI numbers coming down and the like. So far, earnings are holding up better, which is good news for the market, but we're not sure that we're going to be out of the woods until we see the effect through the next quarter's numbers. And we obviously have to wait and see a little bit further on that.
Andrew, Jeff raised a really interesting conundrum earlier on in the show. We were saying, despite the fact that we got all these Fed speakers in the last 24 hours pushing back on both the Fed pivot narrative and the recession narrative, we saw yields move lower, and naturally the yield curve is still inverted. And Fed funds futures remain priced for rate cuts in the middle of next year. Is this a case of the market just not believing those Fed speakers anymore? Have they just completely lost credibility?
Yeah, so I think that's exactly the right question. I mean, it really is a conundrum. The Fed is trying, I think, very directly to say we still are focused on inflation. Inflation's still high. We're still committed to bringing it down. And yet the market reaction over the last week, over the last several weeks, has been to dramatically ease financial conditions, which works against that sort of inflation fighting strategy. And we've seen tighter credit spreads, lower oil prices, higher equities, lower yields, all the things you just mentioned, all of which, boost the economy and works against that inflation control. So I think the Fed really does have a challenge here. I think it is trying, as recent speakers have shown, that it wants to push back some on that market pricing, but the market is not believing it yet. And so again, I think we would expect the Fed to continue to make statements to that end, but also this upcoming inflation data will be really important, I think, for how the market views the Fed's willingness to keep hiking.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.